Hello students, in the previous lecture we completed income from profession. In this lecture we will start income from business. How to calculate income from business? This you have been studying to calculate income from business maybe since you were in 11th standard, correct? You make trading and profit and loss account. The net profit is the income from business, right? Okay. So you make trading and profit and loss account. The net profit is income from business. Okay. So in the question, P&L account will be given. Oops. Just a second. Okay. In the question, P&L account would be given. Okay. And purposely some items which does not belongs to P&L account, that also will be given. So that items you have to remove and calculate net profit. Okay. For example, now P&L account is given. Suppose net profit is 1 lakh. Okay. And in your income side, in your credit side, something like this is given. Suppose by rent received. Rent received from some house property. Suppose rent received is 20,000. So this income by rent received 20,000. This does not belongs to your business. Correct? So this effect of 20,000 is there in 1 lakh. Right? Because of this 20,000 your net profit is 1 lakh. Otherwise it would have been 80,000. Right? So something like this would be given. Then what you will do? Net profit given 1 lakh less rent received 20,000. So 80,000 is your income from business. Okay. So there might be some items which are included in P&L account which does not belong to P&L account. Then that you have to remove. For example, one more example I'll give. Suppose by 2 interest on capital. Interest on capital. Interest on capital is you are not supposed to show in your P&L account. Interest on capital, you show it in your capital account. And in your P&L account only expenditure or income which belongs to revenue nature is shown, correct? Now interest on capital is of capital nature. It is not supposed to come here in P&L account. Suppose my interest on capital is 5,000. Okay. Now because of this expense, because of this 5,000, your profit has been decreased by 5,000. Correct? Now your net profit is 80,000, you know. Okay. Now because of this 5,000, your net profit is decreased by 5,000. Correct? So because your expense has increased by 5,000, your net profit is understated. Right? So what you will do? You will add back. So you will add this 5,000 which will make your net profit as 85,000. Okay. So suppose in your P&L account any item which is not supposed to be in P&L account. Okay. So if it is on the debit side which is not supposed to be in your P&L account, then you will subtract it. And if it is on your credit side, then you will add it. I'm so sorry. Suppose it is in your debit side, then you will subtract it. Then you will add it. And if it is in your credit side, then you will subtract it. Got it? Okay. Now there might be few items which you are supposed to show in your P&L account, but it is not shown in P&L account. For example, in your adjustment they have given Suppose in your adjustment there is a sentence, salary of manager not shown in P&L account. Salary of manager rupees 20,000 not shown in P&L account. Something like that. So what you will do? In that case, you have to show it. Correct? So 20,000 belongs to P&L account. It is an expense. So what you will do? You will subtract that 20,000 salary of manager. So any expense which is not shown in your profit and loss account and you are supposed to show it, then the expense you will subtract. Okay? And any income which you are supposed to show in P&L account but it is not shown, then what you will do? You will add it. Okay? I hope everybody has understood. Let's solve the question. Okay. Income from business. This is the format. Please copy down the format. Net profit as per P&L account. Add disallowed expenses or expenses to be treated separately. Okay, what is the meaning of disallowed expenses? Now, and expenses to be treated separately. The disallowed expenses are those expenses which is being disallowed by income tax officer. For example, wait. Okay. Now there is a expense. Suppose any expense. Like in your P&L account, you have shown this is your P&L account. Okay. And there is something called as to depreciation. And your depreciation is suppose 50,000. Okay. You have calculated, okay, your way, and your depreciation comes to 50,000. When you file your income tax return, your income tax officer is checking your statement of accounts. Okay. And he found that your depreciation you have overstated. It should be 45,000 and you have shown 50,000. Okay. So what income tax officer will do? He will say that 5,000 he has disallowed. Disallowed means you cannot show it as expense. Okay. So any expense which is disallowed, that means you cannot show it. So what will happen? Your profit will increase by 5,000. Instead of 50,000, if your depreciation is 45,000, your profit will increase by 5,000 because your expense has decreased. When your expense decreases, your profit increases. Correct? So this 5,000 you will add. Okay. So disallowed expenses are those expenses which is been disallowed, which is not allowed as expense. So disallowed expenses, you will add back those expenses. Okay. Okay. Next is expenses to be treated separately. Which expenses are to be treated separately? Suppose expenses which belongs to some other head. Okay. So in your profit and loss account, expenses which belongs to business, only that can be shown. Expenses which belongs to some house property or expenses belongs to capital gains, that you cannot show in your P&L account. So expenses which should be treated separately means which belongs to some other head, that also you have to add, because it does not belong to P&L account. So you have to remove that thing from P&L account. So when expenses you are removing from P&L account, then what is happening? Your profit will increase. Correct? Okay. So disallowed expenses or expenses to be treated separately, that you will add. Deemed income you will add. Okay. So if any income which is missed in your P&L account, that you will show it in your P&L account. So when you are increasing your income, your profit will also increase, right? So deemed income also you will add. Okay. And what all things you will subtract? Permissible expenses, income to be treated separately, that you will remove, that you will subtract. Bad debts recovered, disallowed earlier. Okay. So permissible expenses, income to be treated separately, that is fine. Now there might be some income which is shown in your credit side which you are not supposed to show. Okay, or which belongs to other head. For example, rent received. Okay, it belongs to other head. You are not supposed to show as your business income. So that you will subtract, correct? And permissible expenses. There might be some expenses which you have missed. So that expenses also you will subtract. Now what is bad debts recovered, disallowed earlier? Okay. Now suppose, which year is going on? Suppose in 2018, okay. In 2018, a businessman made his P&L account, okay. And in his P&L account, there was 2 bad debts. And suppose bad debts was 5,000, okay. Because according to businessman, this 5,000 he is not going to receive from his debtor. Debtor is not going to pay. He has become insolvent or whatever reason. Okay. The businessman knows that this 5,000 he is not going to receive. So for him it is loss. So 2 bad debts, 5,000. Okay. But the income tax officer, when he checks it, he disallows this 5,000. He says no, you will receive in future. So you cannot show this 5,000 as your expense. Now suppose your profit is 1 lakh. You know your profit is 1 lakh and you want to pay tax on 1 lakh. Okay. But income tax officer is saying this 5,000 I am disallowing. You will pay tax on 1 lakh 5,000. You have to add back the expense when it is disallowed, correct? So now, because income tax officer has asked the businessman to pay tax on 1 lakh 5,000, so you pay tax on 1 lakh 5,000. Okay, but in your P&L account still it is 1 lakh only, but you have paid tax on 1 lakh 5,000. That means you have paid tax on this 5,000 also, correct? Because 5,000 which was actually a loss, okay, but you are paying, showing that 5,000 as your income and you are paying tax on that 5,000 also. Okay. After 1 year or 2 years, suppose 2020, in 2020, the debtor who was supposed to give you 5,000, okay, who did not give you, okay, he gives you that 5,000. Okay. So, in your next P&L, there is an income of 5,000. That is your bad debts recovered. Now, in your P&L account, you have shown this as your expense, as a loss. So, in your next P&L account or whenever the money is recovered, in that P&L account, you will show that you have received 5,000. Okay. So, because of that, now your profit is suppose 2 lakhs. Net profit during this year is 2 lakh. Will you pay tax on 2 lakh because your net profit is 2 lakh? No. Because this 5,000 which was disallowed earlier, you have paid tax already on that 5,000. And in one income, you don't pay tax twice. On this 5,000, 2 years ago, you have paid tax already. So, bad debts recovered, disallowed earlier, that you will subtract. So, from 2 lakh, you will subtract this 5,000 because you have already paid tax 2 years ago on this 5,000 and you will pay tax only on 1,95,000. Okay, so this 5,000 is bad debts recovered disallowed earlier. So bad debts recovered disallowed earlier, you have to subtract it. Got it? Okay. So take down this format, computation of income from business. I hope I have explained all the items which is there in the format. Let's see the first question. Copy down the question. From the P&L account of Mr. Vinod, compute gross total income. Okay. By gross profit 1,60,000. By bad debts recovered disallowed earlier 2,000. You are supposed to subtract from your net profit. Correct? Okay. By profit on sale of residential house 3,25,000. Okay. By profit on sale of residential house. That means this is income from capital gains. You are selling a house and there is a profit of 3,25,000. So this does not belong to the business. Correct? You will show this separately. So again, by profit on sale of residential house 3,25,000, you will subtract. Right? Because this is income from capital gain. You will not show it in income from business. So this 3,25,000 you will subtract. By rent received 3,000. By rent received means it is income from house property. Okay, again another head. So this 3,000 will come in another head. It should not come under income from business. Right? So this 3,000 also you will remove the effect. So to remove the effect, what you will do? You will subtract. Correct? Next, by dividend on shares of Indian company 3,000. Dividend on shares of Indian company is exempt. Correct? So this 3,000, on this 3,000 you are not supposed to pay tax. So again this 3,000 you will subtract. Then by interest on POSB account. Interest on POSB account 1,000. Okay. So up to 3,500 it is exempt. So interest on POSB account 1,000. What you will do? You will subtract it from the net profit because you are not supposed to pay tax on this 1,000. Right? Now let's see the expense side. Okay. To salaries 15,000. Okay. To general expense 15,000. Okay. To advertisement 4,000. Okay. To interest on capital 2,000. Okay. So interest on capital is not supposed to be in your P&L account. Right? So what you will do? You will add interest on capital because it is an expense. And because of this 2,000, your profit is understated by 2,000. Correct? So you have to add back. When you remove a expense out, when expenses are reducing, your profit is increasing. Correct? So what you will do? You will add this 2,000 on your profit. Okay? To bad debts 2,000. Okay. To fire insurance premium of let out property. Okay. So this expense, fire insurance premium of let out property, this expense is of a let out property. So it is of a house property. This expense does not belongs to business. So what you will do? This 100 also you have to remove the effect of this 100. So you will add 100. Okay. To reserve for sales tax. Okay. So this is a reserve. Again, it is not an expense. Correct? So you have to remove the effect of this 10,000. So you will add it back. Okay. To income tax. Income tax is application of income. It is not an expense. Okay. So again you will add this 6,000. Income tax you will add. Okay. You have to remove the effect of 6,000 on your net profit. So you will add back. To donation to NDF, National Defence Fund. Okay. So donation is also personal. Okay. So it does not belongs to, it is not a business expense. So again this 1000 effect you have to remove. If you have to remove this 1000 effect, then what you have to do? You have to add this 1000 to the net profit. Next, local tax on LOP. Okay. Again, this belongs to whatever this is, this belongs to let out property. It does not belongs to a business. Correct? So this also local tax 500, you have to take out the effect. So to take out this effect, you have to add to the net profit. To motor car expense 1000. Motor car is of personal nature or of business nature, we don't know. We'll see if there is some adjustment, but still now for now 1000 you can keep it in your P&L account, it's okay. Motor car may be for business purpose, so motor car expense can be of business expenditure. Okay, so it's okay. To GST due. Okay, now GST due, only when GST is paid, then only you can show it as a expense. This is GST due. That means the businessman has not paid the money. Okay, only in this case, in case of GST, only when it is paid, then only you can show it as expense. Here it is GST due. Okay, that means the businessman has not paid the money. So in that case, this 3500 you will not show, you cannot show it. So 3500 you have to add back. Okay, so GST, I want you all to note it down. GST only when it is paid, then only it is allowed. Otherwise it is disallowed. So GST due 3500 is disallowed. GST paid is allowed. Okay. So if GST paid, you will keep it as it is. GST due, you have to remove the effect. To remove the effect, you have to add 3500. Okay. So depreciation 4500. Okay. Now let's see the adjustments. Net profit is his net profit. That is the balancing figure. Okay. Now let's see the adjustments. Salary includes rupees 500 per month drawn by Vinod. Okay, who is Vinod? Vinod is the businessman. Okay, and he is paying 500 rupees to himself. So that is actually drawings. It should be shown in the capital account, not in your P&L account. Correct? So 500 into 500 per month. That means 500 into 12 is 6000. So salary of 6000 which he is paying himself, it is not, you are not supposed to show it in P&L account. It will be in his capital account, drawings. Correct? It is a drawing. It is, you cannot pay salary to yourself. So it is not an expense. Right? So this 6000 you have to take out from your P&L account. So two salaries, 15,000 is there in your P&L account. Out of this 15,000, 6,000 is paid to Vinod only. Correct? So that 6,000 you have to add back, because that 6,000 you cannot show in your P&L account. Now your two salary has to be only 11,000. No, sorry, 9,000. Right? And you have showed 15,000. So 6,000 you have to take out the effect from your net profit. So you will add 6,000 to your net profit. Okay. Next, advertisement expense include 1,200 being cost of neon signboards. Okay, how much is advertisement expense? 4,000. Out of 4,000, 1,200 is for the signboard, neon signboard. He made a signboard. Okay. This signboard is of capital nature or revenue nature? It is of capital nature because the signboard is going to stay forever. Correct? Signboard is going to stay forever. It is not only for 1 year. Right? So it is of capital nature. So when it is of capital nature, you cannot show it in your P&L account. So this 1200 from advertisement you have to take it out. Correct? So again this 1200 you have to add back. Next. General expense include rupees 1200 being fees paid to CA in connection with income tax appeal before court of law. Okay, this 1200 is the fees paid to CA with income tax appeal before court of law. Okay, this is a expense which can be said it is allowed. Okay, so 1200 paid to CA in connection with income tax, so it belongs to business only. Okay, so this 1200 is allowed. Okay, next, 1/4 of car expenses relates to personal use. So 1/4 of car expense relates to personal use means only when the expenses are of business purpose, only then you can show. Correct? So car expenses is how much? To motor car expense 1000. Out of this 1000, 1/4, that is 250 rupees is for personal use. This 250 you have to add back. Correct? Next, depreciation is found to be in excess by 1500. That means 1500 depreciation has been disallowed. So you will add 1500. Actual bad debts amounts to rupees 1000. How much is the bad debts in your P&L account? Okay, it is 2000. Actual bad debts is only 1000. So remaining 1000 again you have to add back. Next, the residential house was purchased in 2001-2 for rupees 1 lakh. The CII for 2001-2 is 100. 17-18 is 272. Okay. So this is so that you can calculate capital gains, long-term capital gain. Okay. So last adjustment is given so that you can calculate long-term capital gain on residential house which was sold. Okay. So let's start. First we'll calculate income from business and then we will calculate capital gain, or if he has other income we'll calculate other income, because they have asked to calculate gross total income. Okay, so let's start. Write the heading computation of income from business. Computation of income from business. Draw 3 columns. Particulars amount. First, net profit as per P&L account. Which is 4,29,400. Correct? Add disallowed expenses or expenses to be treated separately. Okay, let's see. First one, when you see your P&L account, see your debit side, to salary, to general expense, to advertisement, to interest on capital. To interest on capital is not supposed to be here, so you will add back. Correct? So I'll write interest on capital. Interest on capital 2000. To bad debts, to fire insurance premium on LOP. So to fire insurance premium. Fire insurance premium of LOP, of let out property. Fire insurance premium for the business that you can claim, but here this is for let out property. Okay, so that has to be deducted, so you will add back. Next, reserve for sales tax, income tax, donation to NDF, local tax on LOP, all that you will add back. Reserve for sales tax, reserve for sales tax, what is the amount? 10,000. Then income tax 6,000. Then donation to NDF. Donation to NDF 1000. Local tax on LOP 500. This local tax on LOP is municipal tax. Local tax on LOP 500 is municipal tax. When you calculate income from house property, this 500 will be deducted. Okay. Then motor car expenses, GST due. GST due 3,500. Correct? Now let's see the adjustment. Salary. Salary paid to Vinod. Salary paid to Vinod 500 into 12, which is 6,000. Okay, that is your first adjustment. Second adjustment, advertisement expenses include 1,200 being cost of neon signboard. $1,200. Next, general expense include, that is okay. So that belongs to business only. Okay. General expense include 1200 being fees paid to CA in connection with income tax appeal. That is expense. Okay, that is business expense itself. Okay, so amount which is paid to CA, that expenses are allowed. Next, 1/4 of car expense relates to personal use. How much is the car expense? Motor car expense is 1000. So 250 is personal use. Correct? So 250 can be subtracted. So personal motor car expense. $1000 into 1/4. Okay. Next. Depreciation is found to be excess by 1500. So 1500 disallowed. Depreciation in excess. Okay. Next. Actual bad debts amounts to 1000. How much is the bad debts? 2000. So 2000 minus 1000, 1000. Next, residential house. That's it. So in your expenses, these are the expenses which is not supposed to be in your P&L account, and it is there in your P&L account. So that's why you have subtracted these expenses. You have removed the effect of those expenses. So you have added on net profit. Okay. Now we'll subtract. I'm just leaving 2 lines. If I have missed anything, then I'll add it back. Okay. Now let's see income side. Bad debts recovered disallowed earlier, that you have to add back, because on that you have bad debts disallowed means you have already paid tax on those, on disallowed amount, so you will not pay tax again. So that's why subtracted. Bad debts recovered disallowed earlier. Wait. I'll write the heading. Less income to be treated separately. Or exempted income. Okay. First one is bad debts recovered disallowed earlier. So which is 2000, no? Yeah, 2000. Next one was profit on sale of residential house. So profit on sale of residential house was 3,25,000. Next one is rent received. Rent received is income from house property. You will not show it here. So rent received 3,000. Next, dividend on shares of Indian company. This is exempt, and even interest on POSB account, this is also exempt. So 3,000 and 1,000. Okay, that's it. Let's total this and write in the outer column, and total this and write in the outer column. Please total it. 2,000 plus 100 plus 10,000 plus 6,000 plus 1,000 plus 500 plus 3,500 plus 6,000 plus 1,200 plus 250 plus 1,500 plus 1,000. Ten, 12. So this comes to 33050. Okay, add it. 4,29,400 plus 33050. It comes to 462,450. And when you total this, it comes to 3,340. Subtract this. So this is income from business. Okay. You know, he has two other income, which is income from house property and capital gains, because he sold a residential house, right? So let's calculate that also. So let's calculate income from house property first. So computation of income from house property, two columns, particulars amount. Two columns, particulars and amount. So in your P&L account there was a rent received 3,000, correct? And you have written here also, see, rent received 3,000. So that is income from house property, right? So rent received, which is GAV 3,000, and this was also paid. What local tax was paid, 500 rupees. See, local tax on LOP, let out property, right? So less, write down local tax or municipal tax 500. So NAV, net annual value, is 2500. Okay, so less deduction. There are two deductions, right? One is standard deduction 30% and one is interest on loan. So there is no interest on loan, only standard deduction. So less standard deduction at the rate 30%, it comes to 750. So income from house property will be 1750. Okay, let's calculate capital gains. Capital gains, again make two columns. Particulars, amount, sale consideration, so they have not shown, they have not given at what price they have sold, but they have said that profit on sale of residential house is 3,25,000. So that is the profit. Okay, and see adjustment 7, residential house was purchased in 2001-2 for 1 lakh. That means at 1 lakh it is purchased, at 3,25,000 is the profit. That means it is sold for 4,25,000. Correct? Purchase price plus profit, which is 3,25,000. So that means it is sold for 4,25,000. Correct? Less indexed cost of acquisition, acquisition. So index cost of acquisition is 1 lakh. At 1 lakh it was purchased, divided by CII of year of purchase. CII of year of purchase is 100 and year it is sold, which is 1718. Okay, it's 272. So 100 multiplied by 272. That means profit would be 1,53,000. So long-term capital gain, taxable long-term capital gain, long term capital gain is 1,53,000. Okay, so these are the three incomes he is having. Income from other source is not there, so computation of total income. Draw two columns, particulars and amount. Write down. Section 22. No, section 15, income from salary. It is nil. Section 22, house property. Income from house property. $1,750. Section 28, income from business. Income from business comes to 1,28,450. Section 45, income from capital gains. Right, capital gains 1,53,000. Section 56, income from other source. Nil. Total it. This is your gross total income. Okay. So I believe everybody has understood this sum. If anybody has any doubt, please contact me. Okay. That's it for today.